In this video, we're going to be talking about candlesticks. This video is for beginners, but I think a lot of people kind of skip this step in learning actually candlestick analysis and how to read the candlesticks to tell you when to exit trades, when to enter trades, what's likely to happen. It can really take your trading to that next level. And if you're struggling with trading and you're finding it hard to read price at certain times, it's probably because you don't quite understand the candlesticks. Unfortunately, part of SMC has been kind of discounting, would be a good word to put in there, discounting these candlesticks, and the information is real time given to you from them, and it is very important to kind of like take your trading to the next level. So if you're struggling, even if you're not a beginner, I really recommend you stick around and let me show you how this works. As always, I will be trading the analysis and teachings that I'll be doing, because I believe that's really how to learn, is from learning from someone that is actually trading and using these candlesticks in real time to help decipher price. So we need to first classify the different candlesticks. And really what we're going to be doing is, like, I'm teaching you how to understand the language of candlesticks. First thing to understand is that each candle is based on a time frame. So we go to the chart here. I'm on a 3-minute chart, which means every candle is going to be 3 minutes. There's all kinds of different time frames. Go all the way up to a monthly candles, where each candle is a month, or I can go down to each candle is 10 seconds. The lower the time frame, the more information, because you're getting more candlesticks, but the faster it moves, the harder it is to make decisions in real time. So classification of candlesticks. We're going to keep it really simple. We'll go in depth into it and classify these further. For right now, I want you to look at candlesticks as either movement candlesticks or stopping candlesticks. Now, if we look at these candles here, the green ones or the blue ones are up candles, meaning that they opened here, right? And then it came down lower, which that would be what we call the wick of the candle. So that's the wick right there. And then this is what we refer to as the open of the candle. And as it pushes up, let's say it pushes up to right here, right? But then before it closes, it pushes down, leaving a gap between the highest point and there. That's going to be the other side of your wick. So it's going to be a wick right there as well. So now that is a candlestick, right? And because it opened here and then closed higher than it opened, it is green for an up candle, or blue, or whatever color the people have it. And the opposite is true for a red candle. It would have opened here, pushed up, leaving the wick there, and then it ended up closing after it pushed down, closing there. So it opened here, closed there. So the close was lower than the opening, making it red. That's what decides the color of the candle. All right, now that we got that basics out of the way, so the tail of the candle is the wick, and then the open and the closing of the candle are the opening and closing of the candle. Okay, so moving and stopping action. You would consider these candles that closed on their highs, near their highs, as moving candles, right? Price was moving in one direction. You have a lot of candles in a row. And we want to consider same thing for these candles. They're down candles all in a row. But then right here, you see how these candles, this one, for example, would have opened here, went all the way up, came all the way back down and closed, leaving just a little bit of the body of the candle. The body is from here to here. So that's the body of the candle. That is stopping action, because it didn't go anywhere, right? It just pushed up and then down and stopped right there. Same thing with this candle. It didn't really, price has not moved in this area at all. So this is what I would consider stopping action, or stopping price action. They're stopping candles. So these candles are going to represent consolidation, right? And the market moves in phases. There's a clear framework it follows most of the time, but you have an up move, consolidation, and then you get the up move, consolidation, then you'll get a retracement down, another stopping consolidation, and another move up. Stopping action, retracement, consolidation, move up, stopping action, retracement, stopping action, move up, stopping action, retracement, and now it's probably going to do another move up. That's why these candlesticks are important, to be able to identify where the prices stop moving, right? And then these are what people refer to as dojis. There's a whole different gang of dojis. There's a whole group of them. I'm going to show you a few of them here. This one right here would be referred to as a spinning top because it looks like a spinning top, right? Like those toys that you play back in the old days. This one here is a classic doji. It opened up, pushed up, and then closed right in the middle, leaving no body of the candle. This one's the same kind of thing. They're all the same, right? They all show stopping action where buyers and sellers are kind of equally matched. They just have different names like long leg doji, gravestone, dragonfly, hammer candle. That's a hammer right there. Hanging man, shooting star, inverted hammer. Then when you have a little doji in between there, you have a morning star, and then you get into more patterns. They have patterns that are 2 to 3 candles, but I don't think you necessarily need to learn all of those. You just need to understand the little candles that have a small body to them are stopping action, that are showing a equal buying and selling in an area, right? And those usually happen right before retracement and or the next move up. So let's look at a live price example here. So we had a move up. You had stopping action, retracement. I'm going to go ahead and enter long here. And by long, I mean that price is going to go up. Why? Because we know the market phases here. We had a move up, stopping action, retracement, and then you had a doji right here. After that doji, if it's going to continue up, that's when it's going to do it. So that's why it's pushing up here, is because it's following that framework that I just showed you guys. I actually have a video on the framework that you guys can check out. I'll put the link to it in the description. So there it is. So there's $700 gain off of that simple understanding of market structure in candles. It's not market structure per se, it's the market phases. So now we had to move up. Price is kind of coming down here. It depends on how it closes. You have to wait for the close of the candle. Most of the time, it's going to go the same distance above the previous high it did before retracement. So this is what we refer to as a measured move. So if we look here and we measure this, it went up to about there before it reversed, right? Take this here, same exact thing. It's a framework that the market kind of works off of. All right, I think that's good for the first video. These videos are going to be short, kind of to the point, and high value, but not too long. There'll be a whole series of them. This is video 1 of like 20. So how to make money in trading, part 1, candlesticks. And then we'll go into candlestick patterns, where we'll go through exact patterns that we'll look for in price action.